Yeah, I mean, obviously there's a lot of hype around AI. I mean, I think the way that we think about it generally is we want to invest in AI companies that don't touch anything close to the large incumbents, such as Apple, Microsoft, ChatGPT. And so we're really focused on vertical AI applications. And so some of our investments have been in super niche fields like accounting, AI services, insurance broker AI services. And so we're really trying to not touch the consumer AI marketplace. So we think distribution largely will win there for the large players.
So, Henri, we're such in the early innings of AI. A lot of people don't even know what it is, can't really articulate what it is, how it's used, what the applications
Is that
are.
you, Paul?
Yeah, I'm thinking me. I'm speaking my own book here. How are you guys approaching AI right here? Because it feels to me like AI today is what we were calling big data 5 years ago. And 10 years ago, we were just calling tech. So I'm not sure what it is. How are you guys approaching it from an investment perspective?
Yeah, I mean, ultimately, AI has been around for a decade plus. I think what this wave has seen is generative AI, which is more of the image and tool and video creation, and people are kind of bucketing that for all of AI. I mean, largely for a lot of the companies we invest in, like they're really just enterprise software companies that are using AI in the background. Ultimately, right now there are more CFOs and CTOs who are getting AI budget spends, and so if the company says AI, then their company will allow them to spend more. But at the end of the day, in the next 3 to 5 years, like the customer only cares about how you're solving their problem, right? We've gone through the similar way for Web3 and blockchain. If you're solving my problem on Web2 versus blockchain versus AI, ultimately I don't really care, right? But there are these cycles where you'll see spend get budgeted, and that's why you're seeing a big pullback for a lot of the SaaS public companies, because the software spend's getting drive to the AI spend. But in 3 to 5 years, maybe even shorter, that word won't be where spend is going. It's ultimately, are you solving the problem that the customer has? And so we're less focused on the technology and more about what problem are you solving. If you're using AI versus software, doesn't really matter in the day, but you will get these short-term cycles where people will have spend for certain, technologies because it's hot in the market.
Can you give me some examples of some of your recent investments in AI, like the companies and sort of why them? But dumb it down for me, for sure.
Yeah, so one that I did, it's called Test Party. So basically what they do is they help websites be ADA compliant. And so a lot of people are either deaf or blind or have blurry vision. And there's actually like federal laws that require companies to have websites that are accessible to them, right? And traditionally speaking, people are going through this, either you're paying somebody in India or it's very manual, right? And now we can use AI to actually go through and scrub these sites and tell you, hey, these parts of your sites are broken. Here's the code that can do to fix it. And so you're ADA compliant, and billions of dollars a year, you'll see lawsuits where people are getting sued because their websites aren't compliant. And so this is a tool. This has been like, these companies have been around, but they largely were consulting services before. But now it's, instead of having to pay people to do this, you can actually use technology to help, particularly e-commerce websites, be more accessible to people who maybe not have perfect vision or perfect hearing.
Henri, what's a typical deal size? Or I guess what's a typical investment look like for you guys? Maybe in terms of size. How early do you guys like to get into these companies? What's something in your sweet spot?
I mean, we're super early. So I mean, our bread and butter is kind of pre-seed, seed. So I would say typically these companies are between 0 and $1 million of revenue. Our sweet spot check is a $1.5 to $3 million check, usually for 10 to 15% ownership. So we're really early. I would say half our companies were pre-revenue, half of our companies were post-revenue. But ultimately, the stage that we're at, we're backing the founders. But like sometimes there are businesses and customers, but sometimes there's no product or no customers yet, and we're really just making a bet on the founder to kind of, go and tackle their vision.
Oh my God, that gives me so much anxiety just hearing about that.
Well, what's a success ratio?
My wife says the same.
for someone like you at Harlem Capital Partners, what's a typical success ratio? Like you've started this in 2015, we're 9-10 years into it. So how's that run for you guys?
Yeah, I mean, so for context, we started as an angel syndicate. So for 3 to 4 years, we were investing our own money into companies. And then we actually raised a fund for Harlem Capital 5 years ago. So we're on our second fund now. So really like 5 years into the journey of like having institutional capital. Typical, like I can give you like, we're early in the cycle, but we have kind of like a 40% Series A conversion. I would say that's like really the target for a seed stage fund is how many of your companies get to the Series A. Because from there, you typically see a 60% conversion to the Series B, Series C, et cetera, and beyond. So that's like the near-term measurement that we're focused on. But like long term, yeah, it's really hard. Obviously, early stage venture, 3% of startups become unicorns, and it's a law of outliers, right? And so typically, if you invest in 30 companies, 1 to 2 companies will drive your returns, and
Wow.
like that's ultimately what you're fighting for. And the other 28 will be, call it 0 to 5x's, but the one winner is the one that kind of drives your returns. So
That's
it's
pretty
not
amazing.
it's stressful.
Yeah, I mean,
That
hey,
is not
more
my risk
power to
profile.
you. No, no, this is definitely not my risk profile. I need a steady job. I need the whole thing. Before I let you go, we have like a minute left here. Talk about some recent investments in, say, vertical software.
Yeah, so I have a company called Finterry. So it's a reconciliation platform for insurance brokers. So oftentimes insurance companies are kind of outsourcing who they're using for the sales process. You have like 10 different brokers, they're getting paid differently, different timetables. And so now you can use AI to actually like it's vertical software, but you can use vertical software or AI to help those companies actually manage the process of paying all those brokers. Traditionally speaking, those have been done in Excel files, Word documents. And so we invest in this company pre-revenue. They've grown 10x in the last 9 months. They're growing really quickly. And so what we're seeing for vertical software is a lot of these companies are looking for very specific problems because everybody has been buying software for the past 10 to 12 years. So like nobody really no longer needs this broad solution because Microsoft or Salesforce or whoever is kind of solving that. But if you have a very specific problem, I'm willing to pay for the software. But people aren't generally buying horizontal software anymore because that's kind of been done. There's already a lot of incumbents who are solving massive problems versus
Yeah.
like this very specific problem that a company has.